Welcome back, everyone. This is a brief update on news from the oil market. According to a report written by Reuters, Russia was the #1 oil supplier for China in May 2019. The report specifically stated that China imported 6.36 million tons of oil from Russia in May, and compared to the previous year, imports increased by 4%. China's relationship with Russia is on excellent terms, according to other reports. In June, Vladimir Putin met with Xi Jinping, with many believing they could form an alliance that would assist both countries in dealing with the US sanctions and tariffs. The basic idea that most reports conclude to on this matter is that the interaction between Russia and China would be better off by excluding the use of the US dollar. The payments would be more beneficial to come through with local currencies, and the two sides could benefit from each other on the deal. From a very different perspective, though, the Saudis could be giving space for Russia to sell more oil to China as part of their overall deal with the OPEC Plus group. In the previous months, Russia was not sure if they would support the case for production cuts to be extended throughout 2019. It would make sense if Russia was to sell more oil and eventually agree with the OPEC Plus to cut production for more control on prices. This could certainly benefit the group in total. Other reports include the view that if the cuts remain in place, global demand could surpass supply through the end of the year. On another front, Saudi Arabia is currently boasting over the excess supply it has the opportunity of utilizing in case of additional demand prevailing. Do these statements come as an attempt to display domination as a huge oil producer? Or is this due to the tensions taking place near the Strait of Hormuz? In our opinion, these are both reasons that Saudis could make such statements, and also support the opinion that they are more than capable of backing their comments to the fullest. Last night, the API weekly reading released a massive drawdown figure of minus 7.5 million barrels. This is the largest drawdown for 2019, according to API, and the huge number adds more support for the commodity prices. WTI prices have been supported also by a weaker US dollar, which increases demand as traders can buy more fuel with less bucks. We must know that all of this is happening on the verge of the upcoming OPEC meeting, which is expected to take place next week. Yet the question remains if the meeting can lead to a zenith for the oil market. Please know that a short video will be prepared specifically for the OPEC meeting. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.